Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Wednesday, May 7th. This is the second day of the FOMC meeting, and I believe Jerome Powell will be speaking at 2 p.m. Eastern. Today, I think Unusual Whales channel will be hosting a live stream discussing that, so you guys can check that out if you like Unusual Whales, their YouTube channel. You can also find them on X. And yeah, just going to be going through the usual tickers here. I did also add, let's see, gold shorts. And yeah, because I do have a small position in that. So kind of wanted to go over that. But let's, of course, begin with the UVIX, which is the 2X long VIX futures ETF. Closed yesterday at 44.34, up about 7.6% on the day, but pulling back about 2.2% in the pre-market, down to around 43.36. And so this one, I mentioned yesterday I have a small position in it. Now my small position is half the size. I took profits, I think just let's see, 45 something, I forget. I think, around 10% maybe. I don't know exactly, to be honest. But, well, actually, yeah, let's see. My average was 44, and yeah, so I think 45.10 would have been a 10% profit, and I think I sold at 45.33. We could look over at the 10-minute time frame in just a minute and to see if it did hit those levels in the after hours, which I believe it did. But anyways, yeah, I mean, we are pulling up to this level here, 44.42, yellow line, which was the low over here from April 9th. And yeah, so we did consolidate here. That was a low. That was support here. Could be resistance. And so maybe we get rejected from there and pull back to this downtrending light blue line. And to be honest, with the FOMC meeting, Jerome Powell speaking, I think that we could be seeing a little bit of a rally in the markets. If he does announce rate cuts, I think markets will go higher. If he doesn't, I think we might see a little bit of a pullback, but generally my understanding is that the Fed has been buying 3 and 10-year yields, which I learned from Crypto Rover from his video this morning. And yeah, so that is, quantitative easing or QE, suggesting that markets will go higher, which would mean that the UVIX and the VIX will be going lower. So maybe we do retest 40. And, so if we do pull back, I will be adding to my position. If we go higher, I'll probably be exiting. But let's see. Yeah, and we do see, as the price moved up here, did see an increase in volume, but it's not really that substantial of an increase. Would be nice to see around 7 million shares like traded over here on April 30th. Instead, we got 4.66 million shares traded yesterday. And we can see that the MACD is getting less and less negative, so that's looking good. But we do have here, looks like some hidden bearish divergence, I believe, with the lower highs in the stock price or the ETF price here. But with the RSI, we have broken out or seeing higher highs, so that is hidden bearish divergence. So good to keep that in mind. But yeah, let's look over at the 10-minute time frame so we can see where did this go up? Yeah, to 45.40 in the after hours session yesterday. And then over here, it looks like it was like 45.29 or so, these candles. Let's see, the high 45.30. Yeah, I got to fill up 45.33, I believe. But yeah, we can see here, from yesterday's pre-market, gapped up, floated up, pulled back, bounced, consolidated, moved higher into yesterday's after hours before this kind of massive dump, which I think probably corresponded with Bitcoin rallying and stuff like that, pulling back and then consolidating over here. And let's see, going back over to the daily time frame, I actually just wanted to flip over to the VIX now, which is the market volatility index. Closed yesterday at 2476, being up about 4.7% on the day, consolidating right around that 23.76 level, right around 24 that I got marked there, which does correspond with the high that we hit on September 6th, which was, the high following the pullback, the massive pullback that we saw here. That served as resistance before we got a couple fake out breakouts and then this massive breakout, and then to pull back and hold that as support. Could this be going lower? I suspect so. I think we could be seeing a retest of right around 20, maybe pulling back down to this 786 here at around $18. Although we did find that as support here, so maybe we would not be getting all the way back down there. And if I do a Fibonacci retracement, we can see some levels. We are below all of them, probably why I didn't have the retracement up there. The 786 is at 2621. And, with that being above us, we also have this red line here, which was the high from December 18th. Tested that here, got rejected on March 10th and 11th before pulling back to break massively above it. And then also, let's see. I'm actually probably just going to delete this uptrending level because I don't think it's really that significant. We do have that red line there, so good to be paying attention to that. And so we'll be doing that. But yeah, I think that this could be pulling back down to 20. And I think that could be corresponding with an announcement of a rate cut. If there is no announcement of a rate cut, I do think that this could spike some because I think that the market would really like to see that happening. But then now let's flip over to the SPY. This is the S&P 500 tracking ETF, which closed at a price of $558.80, down about 0.8% on the day, but bouncing about 2.3% in the pre-market up to around $561 there. And this, I'm feeling like this may not be coming down to 550. Just, seeing the up move here, a little bit of a pullback consolidation, kind of like the consolidation over here, reminds me a little bit of a bull flag. And just with the FOMC meeting, I feel like everybody gets antsy around them, but I think that we could be seeing, a rally following Jerome Powell speaking this afternoon. So I'm a little bit cautious with this. I do have a short open with the SPXU. I am looking to probably close that this morning before the FOMC meeting. Also do have a short on semiconductors. I kind of regret holding that into the close and after hours into the pre-market today because yesterday there was, SMCI, Super Microcomputer Incorporated, I believe, and or Semi. I don't know what the SMCI stands for. And then also AMD, Advanced Micro Devices. And so both of those companies had earnings. I believe SMCI pulled back some, but then they both rallied. Anyways, not talking about that here, looking at the SPY. Really just like 550. I think we could be seeing a bounce from there. So maybe today during market hours, we are, like I said, rallying a little bit in the pre-market. Although, sorry, if I said 2%, I meant $2, not 2%, because that's up about 0.3%. In the pre-market. And let's actually just look over. Before looking over, we do see this pulling back some and volume spiking up. So maybe that suggests that buyers are stepping in as that pulls back, but really volume is not elevated relative to April 30th, like I was talking about with the UVIX. And one thing I do want to look over at real quick, just to share with you guys, is a video that I watched last night when I was at work, and that was coming from Free Wyckoff's, just a SPY Wyckoff theory, and that there's this two candle setup that, it's pulled back and, just consolidated before, potentially going higher. So, I feel like it just looked a little bit too obvious, with this gap fill, pull back. It could be going higher. I think that, there's also this gap down here that's at $554.54. So that is a gap that has yet to be filled. I'm not going to make that thicker. I'll just leave that like that. And actually, no, I guess I will make it thicker just so it's easier to see. Also with the 5.5 and then the 5.4, 5.4 repetition of numbers there. I don't know, probably nothing, but I do think that could be acting as some support. So maybe we pull back down to that, but then bounce. So yeah, I mean, this is not a terribly popular video here. It's only about 4 minutes long, but I watched that. I found it informative, and I think it's good to be managing risk. And so let's see. Yeah, let's just look over at the 10-minute time frame, and then I will flip over to the SPX just to get a real quick comparison, like really with that gap fill to the downside. But looking at this from yesterday, pre-market was the gap down, bounce, and then kind of bounced off of this level here, 558.38, but then at the close got the sell-off into it. But we have reclaimed this level here, 558.38, but we did get rejected from 564.52 in the after hours, it looks like, but did kind of form this bull flag, but then gap down into today's pre-market trading consolidation and going lower. So maybe we'll see a pullback, but I think that could be a nice opportunity to lower some risk before the Fed meeting, before Jerome Powell speaks. And so now let's just look over at the SPX, very similar looking chart here, not surprised by that. But, I should draw that, let's see, gap fill to the downside that's based on the close from April 30th. That was at $5,569.06. So good to be keeping that level in mind, as that might be acting as support. Also, we're kind of getting into this cluster of levels here between 5,570 down to around 5,550 or maybe 5,542 there. So yeah, keep that in mind. But yeah, this is the S&P 500 index, the SPX, closed yesterday at $5,606.91, down about 0.77%. So yeah, I mean, I would look for this to retest that and then go higher. I think it's probably going higher, which is pretty exciting. And so with that being said, I am going to be exercising some caution here with my SPXU position. This is the 3x leveraged short, as we can see here, that negative 3x there. S&P 500 index or ETF, shorting the S&P 500. So yeah, I mean, this, downside consolidation, bear flag, downside consolidation, bear flag. This could be continuing to go lower. So I kind of want to remove some risk. I do believe I have a sell order to trim around 23, but I might just completely exit, not just trim, exit the position just to be lower in the risk, have some cash on the side. And then if things rally, then I can reload on some longs. If the market does not rally, then then I can buy the dips or whatever. So good to be keeping that in mind. But yeah, levels to the upside for this: 24.73, 26.89, and then 29.62. Or you can just think of it around 25, around 27, around 30. Corresponding with the bottoms here in yellow, the tops here in orange, and then the top here in red there. So it's like, gradually getting into, the danger zone of being potential tops. And but with that being said, let's look over at some Bitcoin. This had a pretty nice rally here. Yesterday, currently trading around $97. Does look like, look at that. Does look like we filled that CME gap. So that would have been a nice trade there, a nice little swing. Let's see, just coming from the close, it looks like on the 5th. So that was Monday, up about, 3% almost. Actually, yeah, it would have been up over 3% there. So that would have been a really nice swing. I did not partake. Other than just my daily dollar cost averaging. So, I'm feeling good about that. It does look like it could be maybe a little bit of a double top. Maybe this is actually worthwhile to look over at, let's see, at TradingView, unless I can pull up the volume. There's no volume here in the Webull. I don't need that pop up. So, it might be worthwhile to look at the volume to see if this is forming a double top or if we might be continuing higher. So yeah, I will just pull that up here. Actually, I might open up another tab, Trading View, and look over Bitcoin. And so let's look at the Coinbase data. I believe this is what I've been going over in the, let's see, in the Crypto Corners on Saturdays, Crypto Corner Sat Stacker. I'm going to start calling it that, I think. But let's see, volume. Okay, yes, we do have the volume down there. Oh, I could have just double clicked. But let's see. Okay, this is kind of like a very short time frame here. But we do see, testing that level. You can see that green dashed line. Maybe it's a little bit faint. But we do have that line going across there that does kind of highlight that double top. And what do we see with the volume? Over here, testing that level, volume was higher than it currently is. But this day for the 7th is not complete, so you would not expect that to have the massive amount of volume. But even just looking at yesterday when we were testing it, volume up here, volume, let's see, 70, let's see, I'm not too familiar with looking at volume over here in Trading View. It looks like this was around 72,000 Bitcoins traded, I guess. But then over here, it was around 73,000. So a little bit lower. And so that does suggest potentially some weakness. And if we do look here, lower highs, whereas with the RSI, we do have higher highs. So that's hidden bearish divergence. So good to be considering that. Then looking over at Ethereum, now above 1,800, but testing that 100% Fibonacci extension here around 1845. And so, yeah, I mean, this is a pretty prolonged potential bull flag, but we did have it pretty extended over here. So once we got up to this level, it consolidated before breaking out for about 12 trading days, which is calendar days for crypto. And then up here, let's see, currently going for 15 trading days. So it's a little bit longer, but I could see this coming up to around 2,000, and bigger picture, I could see it going up to 4,000, 6,000, and 8,000 by the end of the year is kind of my thesis with Ethereum. And then Doge, looking at this, I've been buying the dip on it. I've been doing a little bit more aggressive, not daily DCAs really. I've just been doing limit dip buys. My average is, or at least was, around 17.4. And so still in the red a little bit. But typically I do daily DCAs via Robinhood, which gets filled around 6 to 7 p.m. Eastern. Daily, $5 DCAs, but I've actually been doing incremental $5 limit buys every, I guess, thousandth of a dollar going down. So from 17.4 cents down 17.3, 17. I think the lowest fill I got was 16 point something. And so, yeah, I mean, I've just been accumulating while down here. I'm not going to do any more limit buys. I will have the daily DCA this evening, unless it gets above my average of 17.4. So just kind of chilling with that. Happy to accumulate, but not getting too emotional about it. I do have a notable Doge sign, especially considering how speculative it is. Relative to something like Ethereum or Bitcoin. But anyways, with that being said, let's look over at uranium. This one did get a very nice move yesterday, up 2.89% on the day, closing at 26.39. This is URA, ticker symbol URA, the Global X Uranium ETF. I was expecting this to pull back to around 450. We clearly did not see that happening. So I'm just going to delete my little doodle there. And now I think it's going to be really interesting. Do we pull back and retest 26 as support before continuing higher? And while I don't have a position in URA, I do have a small position in Oklo, and I did actually trim it yesterday. I'm still holding, but I trimmed about a fifth of my position. Just to capitalize on that 12.5% move on the day, closing at 28.66. And yeah, just a very nice big candle there. I could see this pulling back to find maybe some support around here at 27. That does look like it was the opening price on the second, which was, let's see, that was on Friday last week. And yeah, so I mean, that could be a nice level to dip by at. And I must say, coincidence that I did trim up here above, I think, 28. And I think actually at 28.66, because I think my average is 27.64. I sold one share because I only had a 5-share position. Now I have 4 shares. Just thinking that, well, I didn't have a buy order placed, but if I trim at 28.66, the close, then if it gets filled, then I have a 2-cent fee in Webull, and so then that makes my profit $1, nice round whole dollar number, and then I can more aggressively dip buy if it pulls back, so then I buy that share back at 27 if that happens. And we do have earnings coming up, though, on the 13th, so that's got to be next week sometime. Not sure of the date exactly. Probably Tuesday, I would imagine. Yeah, we are putting in higher lows, higher highs. Maybe we see some resistance, though, around 33 or so, or actually, I should say right around here, I would think around $31. Just got that red line mark there. Actually, I should probably make that yellow because I don't know. We could go past it. And then up here, I would think that would be, around 33. That would be acting as some resistance. But yeah, I mean, this is looking pretty good. And I can actually draw maybe a little ray here from, let's see, the open here, that there, to get a little bit of a breakout. I was expecting this to kind of intersect over here, but not really seeing it. Anyways, lots of clutter on this chart. I think that looks really good, 12.5%, but we will likely be seeing a pullback, something like this. So I would be looking for that. And yeah, so that's what I am looking for. And then let's see, what else did I want to look at? I should probably go over natural gas. So just looking over here at BOIL, this is the 2x leveraged long natural gas ETF, BOIL, closed at a price of $60.77, down about 4.3% on the day, bouncing about 6% in the pre-market, up $3.79 so far. And let's see, the high that we saw on Monday, the 5th, was at a price of $67.75. We're still below that, though. And yeah, and I am really just waiting for this to pull back down to around 40 or 36.90, getting that gap fill there at 36.03 from the close from November 5th. So yeah, I mean, I think that would be the time to buy. I am not going long on natural gas. We can look over here at the chart just to show you guys that, we got kind of a bounce so far. That's what I'm talking about with that. Let's see over here, 6% up. And so this is probably going to be about 3% up on the day so far, 3.5%. I don't know if you can see it right there, but that is corresponding with this green candle for the 7th. And yeah, maybe we go a little bit higher before starting to go lower, or maybe we break above this high that we saw on the 5th, which was at a price of $384.70. I am really just looking for this to come down, test 278 before considering getting into a long, and then maybe getting more aggressive down here around 250. But then let's come back over here looking at some semiconductors now. The SMH, this is a semiconductor ETF. Shaking my head that, we did bump into some resistance here, but like I was talking about with the SPY, 3 days of consolidation here could be just like over here before we start to rally up more. And with, let's see, the SMCI, and maybe I just want to pull up the semis list over here. So SMCI, where is that on this super microcomputer? It is down, 6% in the pre-market. So that does match what I was thinking with, the this downside move after hours corresponding with their earnings report. But if we look over at AMD, they are actually up about 1% in the pre-market. Did see a rally, then a pullback, but bounce. So yeah, I mean, things are looking kind of crazy in the semiconductor space. But yeah, let's just look back over here at the SMH, looking at the daily. I think that we could be seeing this break higher. And so with the FOMC or coming to a close and Jerome Powell speaking, I am a little bit anxious holding my short position because just like we have, tested this as support, we did, break below it. Maybe we could be breaking back above it. And so, maybe a little bit risky to be short. And before I talk about the short, I should mention that the SMH did close yesterday at 215.59, down about 1% on the day. But like I said, bouncing a little bit in the pre-market, up about 0.3%, currently trading around 216.27. But let's look over now at the, SOXS, which is the 3x leveraged short semiconductor ETF. Closed yesterday at 17.95, up 3.28%. Was down, I believe, over 3% in the pre-market. So let's just look over that. Yeah, I mean, did pull back pretty notably. So let's see, the close was right around here. So did pull back, over 3%. So I was a little bit anxious about that. And I do believe I have a sell order placed around 18 to trim, but I might adjust that to sell just to take some risk off the table because, I want to be in more swings, not diamond-handed holding forever. And, I do still have a small position in UVIX. I don't plan on selling that unless I get a 20% swing. The SOXS, the SPY, or the SPXU, I should say, I would be taking profits on those. At around 2 to 4%, I believe, something like that. So nothing too exciting, but, just stacking those gains, that's what I want to be doing. And down move consolidation. We could be seeing, like a Fibonacci extension, something like, over here. We did get something like that. That would be suggesting this coming down to, you can see it right there, 1008. So maybe that's possible, but maybe that's a little bit extreme. I imagine that's a little bit extreme. And so maybe what we could see instead, down move up here and then getting to that high, that would be a downside move to around 14. That seems a little bit more reasonable. And but we have not seen that low. The low so far, the all-time low, I guess, a 52-week low is 1622. But this is an ETF. They are going to have reverse splits because of contango and stuff like that, trading futures, whatever. I understand the consequence of contango, but I don't necessarily understand contango trading futures and stuff like that. So I'm thinking about taking a little bit of risk off the table with that. And, I also wanted to talk about, I almost forgot, gold, GLL. Did pick up a position in this, and this I should know. Let's look at the profile. This is a short ETF on gold. I think it's just a 2x, so not a 3x, so aggressive like the SOXS or the SPXU. But this is just a 2x short. And so gold, or GLL, I should say, closed yesterday at $10.40. Let's see, down about 5.7% on the day. I did have a dip buy order filled at 10.50. Did close in the red, but in the pre-market, if we look over at the 10-minute time frame, we did go up a little bit. And so currently trading around 10.64. I am in the green. It's a pretty small position, but and part of the reason, why I wanted to re-enter my gold short is because, I hung out with some friends on Sunday. And, it's a wife and husband, and they have a friendly little trading competition with each other. Nothing too crazy, nothing degen. She, last time we hung out, was talking about how she had an Apple position. And I was like, oh, well, Apple, I think they were a little overextended leading up to their earnings, they pulled back a little bit. And she's like, well, I'm never selling my Apple. I think she got in at a good price. It's like good for her. And she was like, oh, well, my husband's outperforming me. And he was like, well, yeah, I'm going long gold. And I feel like, he's bragging about that. Good for him. Gold's at an all-time high. But I think that is a sell signal, which means it's a short signal. So maybe re-enter. And we did get a low yesterday of 1040. So the low over here on April 22nd was 1039. This is still a higher low, but we could be going lower. So good to be prepared for that. But I think something that's interesting, looking at the chart here, and we can also look over at the gold commodity chart in TradingView, is what do we see here? We see volume picking up, pushing that price higher here. On the 22nd, went up 2.85%. But here, much lower volume coming back down to that level. And so, not getting a rally or a push higher. So that makes me think, let's see, if I was thinking about this with this being, inverted, I don't know that I can invert the y-axis. Let's see. Nope, I don't think I can invert it. High, low. So I don't think I can invert it. But if this was to be considering like a double top, what would I want to be seeing if this was a double top and it were to reverse? That would be larger, more volume over here, and then less volume testing the same level later. And so that would suggest to me that it's maybe a double top. And so just flip that over, more volume over here, less volume over here. That makes me think this could be a double bottom. And if we do look over here, we do have, I suspect this will put in a lower low. We don't have a lower low in the RSI. So that is going to be, if we do come lower, that would be bullish divergence. And so considering that this GLL is short gold, that would be bullish for this, bearish for gold. So let's look over at the gold chart over here. I'm just going to leave the natural gas one up there because I'll probably look over that tomorrow. But let's look over gold. I don't believe I have looked over at this. But yeah, I mean, what we can see here is this volume is pretty, in our face. But what we see is, let's see, we got this lower high. What do we see in the RSI? Also a lower high, so there's no bearish divergence there. But if this does pump up a little bit higher, that would then be putting in a higher high in the commodity price, potentially a still lower high in the RSI. That would be bearish divergence. And looking at this, the volume we see, getting back to the same level here, but much lower volume. This day, of course, not complete, but the 6th is complete. Getting back to that level up here, corresponding with the tops here in these two candles, or the tops of the candles, so not the wicks. Lower volume. Actually, yeah, so I think that gold's probably going to be pulling back some. So, I've got a pretty small position in GLL, and then I'll be swinging it, probably closing, all of these positions, whether it's GLL, SPXU, SOXS, by the end of the week, just because I want to be in like weekly trades. And also OCLO, it does look like this is pulling back a little bit in the pre-market 2808. I don't know if I mentioned that when I was talking about it before, but all of these, I just want to be capitalizing on the gains in them and just having shorter term swings. I think it's just going to be better longer term. Even if it's just 2% gains, that's 2% gains I can be stacking every week. After 5 weeks, that's 10% gains. That's nice. So yeah, that's kind of what I'm going to be doing. But yeah, since I've been rambling on a bunch about that stuff, I'm going to open up the chat so I can see it. And so, hey, good morning, Emerald Drywall. How's it going? Good morning. I can't read the other handle there since it's in another language. But yeah, good morning. If there are some requests, I'm happy to go over them. Might take a little sip from my coffee here. But if there are no requests, one that I'm kind of curious to look at is going to be Unity Software. They did have earnings this morning, and it was up a little bit, but then it pulled back, kind of volatile. Dang, I've got a lot of levels drawn up here. I did dip by yesterday, hit a low of 20.79. I just added one more share to my position, nothing crazy. I actually did buy some calls too, which will probably end up going to zero. But I had a limit buy for 7 contracts, got a fill of 3 of them, and did add one more share to my position at 21. And we did close above that 21.32, but down 0.7% on the day yesterday, leading up into earnings. And the pre-market price action is up actually 2.66% or around 21.89. But if we look over at the 10-minute time frame, and I might just remove the drawing, so actually it's not too cluttered. But what we can see is, so from the after hours, it just kind of floated higher. And then a move up got rejected actually from 23, hit a high of 23.20, pulled back down to 20.92, but then bouncing. I'm wondering what it could be happening with this. I actually did have this alert go off. Is that at 23? Yep. And yeah, what does that correspond with? That corresponds with, oh, actually, very cool. Very cool. That corresponds with this Fibonacci extension over here. But we did kind of, get a test of that over here. So I couldn't, let's see, horizontal line here being approximate 22.45. That seems like it could be some resistance. Got kind of a number of levels here. Maybe I'll just color that one yellow. So it's a caution level. And this, we did get a fill of this gap here. So maybe I will fill that line. And maybe I will just, let's see, adjust this Fibonacci retracement to only include that 50%. I believe that's what it is. Yeah. And so, and then I will also color that green because I think that was potentially a dip buying level, but maybe we do roll over. I have no idea. But yeah, this doodle is kind of still in play, although we didn't get a fill of this gap down to right 19.25. And so, yeah, I think that's a possibility. I think it's going to be prepared for that. I would be happy to add more at 19.25 or lower. Because I have a pretty small Unity software position in all honesty, but I'm not emotional about it because of that, so it's nice. But yeah, we do have this red line here at 19.99, that being the closing price from April 9th, and got some consolidation below there, probably going to be acting as support. So yeah, that's one that I am excited about. How about AMC and GME? So yeah, I can pull those up real quick. Got about 6 minutes before the hour. So I will add AMC and I will add GME. And so I have to say AMC does have earnings. So maybe I'll actually go over GameStop first, because generally, oh man, there's a lot of stuff to go over with these actually, both of them. So with GameStop, I am actually going to pull up the data over here. So one of these charts, this is the $20 call from June 20th. But really what I want to look at is the net call premium over here. That was that prior chart, over here. This is older data. I need to refresh this. This is from, actually, I'm kind of confused. It says the 6th there, but this doesn't look like the correct data. Because if we look over at the data here, what do we see? A lot of red. Okay, so that's not necessarily good because we did see net call premium come down by 1.82 million. But what we see is this red coming down, the net put premium down by 14 million. And so those, I believe, are $95 puts that expire in, January. And so those are being sold. And so selling puts is bullish. And so that's basically saying that this person is not expecting price to go to 95 or be closing at 95 in January, but for it to be going towards $95 a share. So that's really bullish. $14 million betting that the stock price will be going up between now and January. So it's not necessarily bullish, but it's like anti-bearish. And so it's basically saying that they think that the downside is behind us, that we could be forming a bottom. So 65% on the bullish side here. And if we look at the data here, Let's see if you can see all that behind Ed. And so, yeah, this is the contract that everybody was talking about, the $95 put that expires in January. I don't know how well you can see that. 254 days between now and expiration. And we saw, let's see. This is sorted by highest volume contracts, but let's sort this by volume. Premium. This doesn't say premium, but I want to look at this data here. And so what we see is it's in front of Ed, so I'm going to have Ed step aside here. Sorry, buddy. But we did see this contract get an increase in open interest of 1.3 thousand. So the open interest going from 1.1 thousand to 2.4 thousand. And the amount of premium traded on this yesterday was 18 million. So a lot of money there, and the majority of that, 85%. And so let's actually pull up the handy dandy calculator here to see 18 million times 85%. That's going to be around 15 million. So that, is going, being sold. So that is really, going long, because these are puts. And then the other contract that we can look at that does look like it was pretty popular is the $25 put. But that looks like it's kind of neutral, buys and sells. So, yeah, I think that GameStop looks really good. I'm very curious to see when they announce that they've been buying Bitcoin, because I know that's going to be happening. I think Bitcoin's going to be back above 100,000 soon. And yeah, so we want to see that going higher. With AMC, and actually this is a really nice exchange that I had with Volatility on X. So let's see. I'll just, I'll pull up his page here, Volatility. Talati Tapan. I'm very bad pronouncing that. I'm sorry for butchering it. But yeah, so he posted this. In all seriousness, this looks like it's itching to break the falling wedge. Earnings on Wednesday, they better deliver strong future guidance to break the 317 level. So that's one that I would be looking for based on his analysis. And I have to say, he is always bearish about AMC, trashing apes, stuff like that. So if he's flipping potentially bullish, then, I think that's a pretty good sign. When bears flip bullish, when somebody who's anti whatever direction you're in, they're against your direction, and then they flip to your direction, that is, kind of a good sign. So a potential move to 377, bullish reversal mark. And so 238 is the all-time low. And so it would be all over if it breaks that level. And so just looking at his chart here, falling wedge, this is something that I have been not necessarily looking at, but I kind of noticed it in his charts. And so he's just got this doodle here suggesting that we need to be breaking above 317. So that would be a close above 317. That is going to be based on, let's see, the high from over here, which would have been the end of April. So I have it marked as 318. So we want to be seeing a close above that. And let's see, he has 377 marked over here, which probably corresponds with the highs from right here. 218, the highs were, let's see, 377. So yeah, I think that's, I agree with him on that. And actually, I liked it down here. And then I kind of exchanged a little bit with him on this. Because, I said, I don't believe it. I must be dreaming, because he's always so bearish. And then he said, honestly, it's forming a bullish wedge, but unless the lower high is not taken off, all bets are off. Future guidance is crucial, and no dilution/offering dialogue. And so I continued with, I noticed the wedge on one of your prior posts, but I'm not getting ahead of myself. If it starts to break out, AA will probably, so Adam Aaron, the CEO, will probably dilute before the bullish move can play out. And that's what happened in the past over here when we were closing on a Thursday at a price above, that was over here when we were closing on a Thursday at a price above $5. And then, Friday morning, Max Payne 450, I believe, he announced dilution to bring price down. So I feel like it's possible he's a plant, not necessarily in the best of favor, in our favor. It's just been diluted so much. over the past few years. And so if he says cash is king, I'm unfortunately going to be at work during the earnings call, but if he says cash is king, I'm running for the hills. I'm joking, I'm just going to chill. But in the past, he said cash is king, and then he's diluted. And so volatility's saying, I wish he wouldn't have tagged Adam because I don't want Adam to know that I know that's the key word. But I doubt that he pays attention. That's what I think will happen. CEO Adam will dilute on AMC shareholders the moment it gains any traction. And then let's see. I'm not going to continue on with those other comments because it is past the hour, so I'm going to end the stream. Although Hydro Hustla is requesting plug, so I'll pull that up real quick. I think I got that over in TRL, but I might move that over to PMP, pre-market prep, just so I can include it in the tag. But yeah, so let's see, down 0.87%, trading around 79.60. Same as before, I think that this is just going to continue bleeding. I think now that it has basically resistance around 90 cents. So this red line that I have drawn here also seems to correspond with this green downtrend going back to the lows from January 18th and the lows from, and so I should say January 18th of 2024, and then the lows of September 6th. And so that downtrend now going to be resistance. Do have kind of a confluence. 90 cents also being kind of a round number. We did get this like pump towards one, above one at the end of the month. That makes sense because to maintain compliance with the NASDAQ, plug or any stock wants to be closing the month above $1 and wants to be having an average trading for 30 days closing above above 1. And so that didn't happen. I think that this is probably going to lead to a reverse split. Following reverse splits, you can look at a number of stocks. They maybe have a little bit of rally around it, but they end up bleeding. And so, yeah, I think that plug's just going to be bleeding. So for me, like I said, I am completely out of my position. It wasn't that huge of a position. I had about 200 shares. I got out at an average price of 85. I could have, and that was because I was selling covered calls. I didn't expect it to go up to a high of 119. If I had not sold covered calls to whatever price, I almost rolled one of those positions, and then I would have eventually been forced out. I would have been happy to take profits at 119 or at 1. So I feel like now the trajectory for plug is probably a bounce to 90. I suspect it will get rejected and then roll over to new 52-week lows. It's not looking too strong. So, but if this is a long-term play, maybe this really plays out, but it's like long-term play, maybe years into the future. And so it really just depends on, opportunity cost, how you want to be playing that. But yeah, I do think that this is probably going to be hitting new lows. Or 52-week lows. I think it maybe had lower lows in the past. I'm not sure. I know that plug has a longer history than something like ChargePoint. But anyways, good morning to all of you guys. I am going to get tuning into Gareth Soloway's game plan. And so with that being said, I'm just going to bring Ed back so we can say, that those are just our thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to more pre-market preps like this. And just to note, since I am kind of changing things, I will do a video on the weekend about kind of some changes to the channel. I'm probably not going to be doing many videos anymore. I'll just be doing pre-market preps on days when I work afternoons. And then I'll probably be doing like post-market preps on days when I work mornings. So that will be next week. And then I'll be doing the crypto corners on Saturdays. And then so I will be doing live streams every day. Ticker Request Live is super fun for me. I enjoy it, but the sun's still up here where I'm living. And so I, just want to be outside, whether that's being productive, working on stuff. And so maybe I'll do occasional Ticker Request Lives, maybe if it's like raining out or something like that. But I kind of just want the focus of the channel to be on, like the thumbnail says, looking at broader picture stuff, whether it's volatility, the S&P 500, And then also, what did I, and crypto. And, because Crypto Corner, I'm really doing that for myself. It's really helpful for me. And then the other thing that I have on the thumbnail is swings. So just talking about, shorter term moves and trying to close positions by the end of the week. And so for me, those positions are GLL, SPXU, and let's see, the UVIX, I'd probably hold that because, it's just one share right now, but then also the SOXS. And so I'm probably going to be getting out of the SOXS and SPXU today for 2 to 4% profit. That's nothing too crazy, but those gains will add up, and then I have cash on the side so I can deploy it if something does look really exciting. Because there has been some, interesting short plays recently on Netflix and Palantir. There's been chatter about it on X, and Gareth Soloway's covered them, and it just looked really clear to me. And also with people being bullish, even though those were overextended. So, I kind of want to have capital on the side for in and out plays like that. But anyways, I've been rambling on after the closing thing here, so I'll just throw it up again. I will be doing a pre-market prep again tomorrow. I'll try to start it at 8:15, but I might be a few minutes late. But my goal will be to start at 8:15. Hope you guys have a great day trading. I hope it's great weather.